Welcome to the NEOS Monthly Income Podcast. I'm Tom Lydon, and as always, I'm joined by the co-founders of NEOS, Garrett Parallella and Troy Cates. Gentlemen, welcome. Great seeing you.
Hey, Tom. Great to see you as well.
Hey, Tom. How you doing?
Great. You guys enjoying your summer?
We are. Yeah. It's in the thick of it. It's hot, but it's nice.
Well, you guys have been hot. There's been a lot of good things going on. And speaking of being hot, you're coming on your 3-year anniversary. Garrett, talk about that.
Yeah, thanks, Tom. We're excited. I mean, we started this business really to continue with what Troy and I have been doing together as partners for almost 18 years. And so NEOS really coming across our 3-year anniversary, over 26, 27 teammates here with us, 12 ETFs, over 9 billion of assets has just been a great testament to really our focus and dedication to the ETF space and these types of products that we've really been pioneering for, the better part of 10, 12 years now.
And Troy, you have a steady stream of new products that you're developing, and it's been very well organized, and the adoption's been pretty impressive.
Yeah, we've seen a really nice adoption. As Garrett was saying, the assets have grown over the past 3 years. We continue to bring out new products. We have more products in the pipeline for the rest of the year. So we're really excited. The team's really excited, and everybody's really motivated to keep bringing out new products, keep talking about these products, and just bringing out these more solutions for people to invest in.
So on this podcast, we're going to take kind of a fun twist where we're going to be talking about digital gold. We're going to talk about gold itself, and then we're going to talk about your products related to those that also have a dividend stream. So let's get started. And Garrett, maybe you can talk about Bitcoin and the way NEOS attacks and offers a Bitcoin exposure to advisors and investors' portfolios.
Listen, so we wanted to continue with being a solutions provider. And so as we talk to investors out in the marketplace and an appetite for having exposure to Bitcoin, but maybe not just fully long spot Bitcoin, I think as a lot of the audience knows, we really focus on the ways to harness volatility to drive tax efficient income. And so that's the same premise we do for BTCI, or NEOS Bitcoin High Income ETF. And so what the goal behind that is to gain exposure to spot Bitcoin, but to harness that volatility by laddering out a covered call strategy to generate income. So our goal for that product is to give those investors that maybe missed Bitcoin at 20,000, 50,000, 80, 120 to get in with the ability to generate income, for those months that you have, the Bitcoin up slightly, flat to down, and not always just playing for the full, long term, hoping it goes to, 1 million. So just our kind of spin on things of lowering volatility, really focused on that income stream.
Yeah. And Troy, volatility, again, if you're looking at NEOS, it works in your favor and it helps you get that distribution stream, right?
Absolutely. So if you think about volatility in Bitcoin, normal volatility is probably 3 to 4 times whatever the S&P 500 or maybe the NASDAQ 100 is. So you have all this volatility embedded in this one product. And so using that volatility and trading the options around it, we're able to generate a lot of income and be able to distribute that throughout the year. So it's very exciting. As Garrett was saying, a lot of people looked at this and they didn't like Bitcoin at 20,000. They hated it at 50. They didn't want to look at it at 90, and now it's over 100, 110. And they're like, why don't I own this? And now they're worried about where do they pick their spot to buy it. And we look at it as if you're going to get into a product like BTCI, you don't have to pick your spot because you could earn some income and get those distributions and capture a good portion of the upside and maybe possibly outperform a little if Bitcoin moves lower by the amount of premium we bring in on a monthly basis. So it's an exciting product for us.
Garrett, some advisors were forced to buy or have an allocation into crypto a couple years ago, and some just said, you know what, that's not for us. We're just not going to do it. Has that changed? Today, are advisors really forced to be able to have some type of allocation? And is it painful if they didn't want to do it a couple years ago?
And I don't know if I would say forced, but I would definitely say you're seeing a much broader, deeper adoption from advisors and from investors as a whole, right? I mean, I think, of course, in the last year or two, the ability to have the spot Bitcoin ETFs. We also see now in 2025, right, a significant move with the current administration, right, to support growth in crypto. And I think ultimately all of those things are gaining just investor interest. And so I think advisors advisors that we're talking to are hearing from their clients saying, I'd like to add this. How do I have a thoughtful way to add Bitcoin or crypto into, my overall portfolio for that higher octane allocation? And for BTCI, it's another tool for advisors to build and construct the portfolios to ultimately have that volatility dampening and that extra income that's coming off of the Bitcoin, so that maybe it's less sensitive to, as Troy mentioned, right? Pick a spot at 120 and now the pullback at 117. It's kind of more focused on, you could get the exposure, but for those investors that are certainly middle to later as well, that don't understand hot wallets, cold wallets, crypto platforms, having shards, keeping their their Bitcoin locked up in other ways, this just gets them something that fits right within their exact custody portfolio and everything that they have there. And I think just makes life, a lot more simple.
Troy, you guys don't bring anything to market unless you have the confidence that you've got the tools to execute. In Washington, D.C. and all these moves that we're seeing, is this helping you from a adoptability standpoint, an execution standpoint? Anything you could add to that?
Yeah, think about this administration compared to previous administrations. It's very pro-crypto. They're very much more at the forefront of supporting Bitcoin and other cryptocurrencies. So for us, I think it's become more widely adopted, even in the past, 6 to 9 months. So it's a space we're continually looking at. And yes, we don't bring out a ton of products just to bring stuff out. We're very strategic in how we launch things. And as Garrett mentioned earlier, we have 12 ETFs, and we continue to bring out more and more ETFs that will fit out and round out your asset allocation.
Speaking of new ETFs, one of your newest is the gold ETF. That also has a dividend stream, and you've just announced what that dividend is, Garrett. So talk a little bit about gold.
Yeah, sure. So we launched the NEOS Gold High Income ETF, which the ticker is IAUI. So kind of after the periodic table, gold with income. And so really we want to give exposure to spot gold, just like we were talking about in, Bitcoin or potentially some of our other products, but give you exposure to physical backed gold with a high income component. And so what I think people don't really quite understand is there's actually more volatility in gold than what I think you're used to seeing on television. Come buy your gold bars from, XYZ Capital Corporation. It's now the ability to have that physical backed. But the fact of the matter is there is actually price action and volatility, especially in implied versus realized volatility, which is allowing us to harness that income rate that we're able to generate, against an asset class that historically has never had gold. I think what's unique about gold, and maybe slightly different than a Bitcoin or a crypto, is it's been around, right, for decades and decades and has been stable allocations in portfolios. But a lot of people hate to have the gold allocation in those times where gold does nothing, right? Prior to the last 2 to 3 years, where we've seen this historic 100% run in gold, it traded sideways for a decade before. And this is the ability to harness, right, the volatility level and kind of those flat to sideways months to generate income. And I think that's been really unique talking to advisors about, of allowing them to be able to transition from just a long, spot physical gold, into something that can produce income in the broader part of the allocation.
Troy, when you talk about gold and you talk about Bitcoin options, they've got to be different from the other options that you're using with your core products out there. Can you talk about that a little bit? And are there other nuances there that we should be thinking about?
Sure. So we'll start with Bitcoin. You think about this as a newer space to be able to trade in an ETF format or a 40 Act fund. And you think about those funds, all the exchange traded products like IBIT and so forth that came out a little over a year ago. Those have options on them, so we could trade those if we need to. But the SIBO also launched index options that track the price of Bitcoin. And so we tend to trade those index options for BTCI. There's plenty of liquidity there. We talk about it all the time, but one of the things we love about the ETF structure is that transparency. So at any point someone wants to see what we're holding, what we're doing in the fund, they could pull up our holdings on our website and dive in and see, okay, they're short these index calls at these levels, and they can look up where the current index price is, and they have a synthetic long, meaning we're buying a call and selling a put with the same expiry and same strike to get a synthetic long on the index for Bitcoin. And then we also have a piece of the portfolio that's long one of those ETPs. So it's a little bit different of a structure than you might see in other funds of ours or others, but that ETF structure in itself is very transparent. So for Bitcoin, we're usually trading those index options, but we have the ability to trade, an IBIT option or others. So we leave it and we see where the liquidity is and what makes sense for the fund and for the shareholder.
Okay. And Garrett, talk a little bit about tax efficiency. I mean, this is a main core aspect to what Neos is offering. I can't imagine the tax efficiency is as high or as strong as we've seen in some of the core products, but is there any tax efficiency there?
Yeah, sure, Tom. So there's definitely tax efficiency. I think one of the core elements of what Neos does here is we embed the ability for tax loss harvesting within the fund. So very similar to what most investors are looking at today within their broader part of their portfolio. And when we can have a tax loss harvesting opportunity, that's what reconstitutes the distributions to a return of capital, right? And that's how we talk a lot about not being return of principal. It's return of capital, taking, right, overall total returns, whether that be coming from the options or the underlying, and being able to reclassify that in a return of capital. For anyone who doesn't know return of capital, the short answer to that is it defers your taxes to sometime in the future when you sell the fund at a long-term capital gains rate. So it can take an ordinary income, even a long-term or any other type of, and convert it into long-term capital gains that you defer in the future by way of reducing your cost basis in the fund. So that's the simple version. I know we've talked about it before and we can talk more, later, but that tax loss harvesting element is key to all of our products that we have here at Neos. The options don't get a 1256, meaning it doesn't get a 60% long-term, 40% short-term treatment just because of the classification of what Bitcoin is. There's not much that Neos can do ultimately on that, but really that the key component that I think a lot of people know us for is how we look at return of capital and the ability to harvest that through losses during different market cycles. And so that is tried and true about our Bitcoin product, and our gold product.
And just to be clear, if you're hearing these things for the first time, it shouldn't scare you. First of all, because the reporting comes to you. So if you happen to be at a brokerage platform, every year you get a 1099 on your accounts. If you own these products, there is a designation of return of capital, and your accountant knows how to apply that from a tax standpoint. I've been going through this the last few years because I own these as well. And it's not only nice to be able to see that dividend stream, but also you're able to keep more in the end. And yes, I realize that there's going to be an adjustment to the cost basis. And at one point in time, hopefully way down the road, my kids will have to deal with it. But that is one of the things that is an advantage as well. So don't let the codes or the return of capital terms scare you. Obviously, they do a great job at the Neos website being able to dive in deeper and explain that. But those are some of the most exciting things, Troy, about what you folks offer. I mean, it's not only the great distributions, but the tax efficiency is huge.
Yeah, I think when we're building these products, the tax efficiency is definitely something that comes into play. One, with the index options, as Garrett was mentioning, trying to get that 1256 contract to help with your overall tax bill at the end of the year. But I think as we think about it, we're really trying to build these products to capture a lot of the upside, capture a majority of the upside of the move in the underlying reference asset, Bitcoin or gold or whether it's the S&P 500 or the NASDAQ 100, and also make sure that net after-tax distribution is as close to the gross as possible. So that's really the aim. You don't want to get this nice distribution throughout the year, then get your 1099 and realize you owe close to half of it to taxes. So for us, if we could mitigate those in any way, whether it's through the 1256 contracts, return of capital or any others, and help you defer your taxes and give you a more favorable tax treatment. That's one of the goals of all these products.
Garrett, as we're getting close to wrapping it up here, when you talk to advisors or self-directed investors that are looking at their portfolio construction, I mean, the idea about being able to enhance your core, say you've got a 60-40 allocation, and you talk about this regularly, not only does the dividend stream help with that overall income, but also the way you manage the portfolios help with reducing overall volatility. Talk specifically to these products, to Bitcoin and to gold, and what they may do do for a portfolio?
When you think about the income and the volatility, right, are two things we spend a lot of time talking to advisors about. And when you're looking at portfolio allocations with utilizing these types, right, Bitcoin is, of course, going to be a much more higher octane, right, allocation, as I think everyone naturally, knows. So that's going to aid your overall portfolio, a significant income increase, right, from the distribution rates that the fund are kicking off, but is more in that growth type of income allocation, which might sound kind of counterintuitive to one another, but you're now able to kind of leverage, growth assets in the means to generate income here at Neos. Gold, I think, has been that stable core, endowment model strategy where everyone's got a buffer of inflation with gold. They got just a downside equity market hedge with gold, right? It's been used in a lot of ways to kind of be that cornerstone of a volatility dampener in portfolios. And now with the ability to harvest the volatility to generate income, right? I think it's an area of the portfolio that allocators have historically not been able to ever generate income and is known, I got to find income other places. Well, now you have the ability to do that, right? And I actually was just speaking with a really large institutional allocator. They run about 50 billion for one of the largest bank platforms, and their multi-asset income strategy that's been around for a long time has been dying to own gold, but they haven't been able to because they have a mandate that everything has to produce some level of income or a distribution. And now this is one of their most attractive qualities because they pretty much have a static 5 to 7% allocation to gold, and now they have the ability to actually make an investment into that asset class to where they want to be within, kind of their models. So I think they're slightly different in the total return element, but now taking asset classes that had no income ability before, whether emerging or ones that have been around, since the dawn of time, ultimately to add income into the portfolio.
And in closing, Troy, any anecdotal conversations you've had with advisors regarding introducing Bitcoin or introducing gold in the portfolio?
When we first launched Bitcoin, it was interesting. We didn't know what the advisor demand or what the reception would be. And they'd call us and talk to us about some of our other products. And at the end, they'd always say, and tell me about Bitcoin, because they had all these clients reaching out saying, why don't I own Bitcoin? It's now at 100,000. It's at 110,000. Where's my allocation to it? Why are we missing out on this huge move? So it's been nice to see that reception, but also be able to talk about these products in the same way we talk about our other products, whether it's the tax efficiency, it's the income. So it's really been great. And then the reception for gold has been huge. Right from the start, we started to see incoming calls, inflows into the product. So it's been really nice, even though it's our newest product and only been out, call it 2 months.
Guys, this has been perfect. We've had a lot of questions about both of the products, and you can just see by the flows that there's a lot of popularity there. So congratulations. I hope you guys enjoy the rest of your summer. We're going to come back after Labor Day for the next episode of the podcast. This has been a blast. Thanks again for all the education. We really appreciate it. And to all the advisors and investors out there, enjoy the rest of your summer too.